This conference will now be recorded.
Okay, good afternoon, everybody. This is Greg Morton. It is Saturday, May 28, 2022. This is the weekend update for the Greenville East Side IBD Meetup Group and the Stockyard Meetup Group. And of course, this is all based on Bill O'Neill's Canslim investing system. There's also Memorial Day weekend, so special thanks to those who served, those who are serving, and those whose spouses and our fathers or parents are currently serving. We have a lot to be thankful for, including the freedom to do about everything we do currently. So as always, this weekend reviews for educational purposes only, not recommending stocks or securities to buy or sell, and all investing has substantial risk of big losses. We want to learn first and only then invest. And Canslim's registered trademark of Investors Business Daily. So today, we will look at the M factor like we always do. We want to stay in step with the trend at all times. We're going to look at what do we see this week, constructive action or destructive action. We see the Grim Reaper of EPS season is still hanging around and really just whacking some stocks. But we did have a follow-through day and a subsequent follow-through day on the NASDAQ. And we're also seeing some Canslim stocks setting up in full and proper basis. So that is constructive. And then I'll just mention our upcoming monthly meeting at the end. So the M factor, of course, this is the most powerful letter in the world for Canslim investors. Key principle, extensive O'Neill research shows 3 out of 4 stocks follow the general market trend. I think personally in a bad bear market, I think 9 out of 10 can follow the general market trend. We need to stay in step with the trend, whatever it is. Otherwise, there's going to be a bad outcome. And it's very difficult, I think it's impossible actually to win on the long side when the trend is not your friend. And Charles Harris, even on IBD Live this week, just said it is just very, very difficult to ever make money in a bear market on the long side. So actually, I scratched this out. This was last weekend's slide. Said the trend was not our friend last weekend. Now, maybe making up, and maybe the trend is going to be our friend for a little bit. So we're going to have to watch and see. So the M factor or the trend, we want to interpret, we don't want to predict. We look at 3 things. The actions of leaders. So I'm seeing a little bit of life now beyond just oil and gas. Some others are showing up. Actions of stocks owned. We had a follow-through day, so we increased exposure some in the group teaching portfolio. Then we look at the market pulse, distribution day count, price and volume on the indexes, as long as other things that I also use to track market direction in the coloring book each day. So let's get out of here and take a look at those things. So let's go over to MarketSmith first. So here we are on the daily NASDAQ. So you can see I actually haven't marked the most recent low. I think we came down just right at 32% was the low over here. So last weekend we'd had that follow through day number 4, and then it failed. And then this week we had follow through day number 5 in this bear market right here on Thursday. And then we had a subsequent follow through day on Friday and got back above the 21-day for most of the day, including the close. Overall, 50 still headed down, 200s still headed down, but maybe with the follow through day, I mean, one of 3 things is going to happen. Either this is going to come back down quickly and the follow through day number 5 will fail. I think that's maybe the least likely scenario. I think more likely, not predicting, either we're going to have a bear market rally, which here we've got 1 leg down, 2 legs down. So we may have this little tradable rally, comes up in here somewhere, and then we get a really wicked 3rd leg down that just results in capitulation. Or this is the start of a new bull market and we just keep proceeding on up. So for now, we just assume at a minimum, as of Friday, looks like at least a bear market rally, maybe more. And so we're going to follow our rules. So it'd be nice. And the 10 and 21 have turned up. So we're seeing some positive things there. Still have some work to do, but looking better. Go to the S&P 500, seeing the same thing, came back above the 21-day, We did not have a new follow-through day this week on any index except the NASDAQ, so it would still be nice to see a confirming follow-through day on the S&P 500 or the Dow. Here's the NYSE. It's probably the strongest, furthest above the 21-day and getting ready to maybe attack the 50-day. Dow, sort of same thing. Hopefully it can push through the 50-day, not just hit its head on it like it did right there where the arrow is. Russell, small caps, actually spent the whole day above the 21-day on Friday. So that's constructive also. And it's sort of interesting, the small caps did not come down and make a new low here like the NASDAQ did. So, you know, sometimes the small caps lead us down and lead us up. So maybe we're seeing that there, a little bit of strength. S&P 600, right at the 50-day, also spent almost 2 days above the 21-day. So we're seeing a few constructive signs now on that. Let's look at the coloring book. Here you can really see it. So our follow-through day was on Thursday, and then we had the NYSE as well as S6P 600 and IBD all flipped back to green. IBD went back to confirmed uptrend. Market school exposure went to level 1. I don't know what it was on Friday after the close because I haven't updated it yet. And then we also had some MMTS changes flip red to yellow. More importantly, we had a subsequent follow-through day the next day on the NASDAQ, up 3.33%. All the MMTS factors flipped to green. And we've got 2 days of new highs outpacing new lows on the NASDAQ, and we have 3 days of that on the NYSE. Still only have 9 buying days, 10 selling days, but you know, we're getting close. Maybe soon we'll have a little bit more of an accumulation dominant tape. The negatives, this follow through day, it was up 2.6%, but it was below average volume. The volume was up, but it would have been nice if it was above average. And then really the same thing on Friday. And then we also had a couple breakouts. I forgot to, haven't entered them in here yet, but we had lithium, Cabot, and ROCC. So that's tickers LTHM, CBT, and ROCC. So we had 3 breakouts that day. We had a breakout on the follow-through day in SM, and we had a possible early entry in ALB also on the follow-through day. So we were seeing, you know, things are more constructive here. We want to see this continue, accumulation days continue. Oh, the new gray shading, in case you're curious, I went back and marked. So the dark gray is a Fed meeting and a light gray is the Fed minutes. And these are always 3 weeks apart and the meetings are 6 weeks apart. So it's pretty amazing when I looked at this, how quickly they came. And in this current environment, the Fed minutes and the Fed meetings have been important and can move the market either way. So we had Fed minutes this week on Wednesday as the light gray box. So that's what we have there. Go back over here, group teaching portfolio. So we started weighting back in, now 51% invested on a cash basis, nowhere near using any margin. Had a strong week, actually finished May in green, always finish a month like O'Neill did on the last trading Friday of the month. Still down 7.65% for the year. And the only full position we have, a little bit oversized, is Merck. Everything else is partial positions, is sort of still waiting back in, but improving from where we were when we looked at this last time. So that's positive. So let's go back over here. We looked at all of those. So just kind of comparing, I thought this was a nice contrast between last weekend and now. So last weekend, the window of opportunity was closed. Now the window of opportunity is open. That's Steve Swetz's market direction model. So that's positive. Last weekend, IBD was in correction. This weekend, IBD is in a confirmed uptrend. NASDAQ had a follow-through day, and we had a subsequent follow-through day, which is a sign of strength. Last weekend, every one of the MMTS signals on all 6 indexes were red. This weekend, they're all green. Distribution days were heavy last weekend, still 6, 7, 8. Still heavy as 6 and 6 and 6. But remember, that's my count within the 25-day window. Because we're in a correction, the IBD count is actually 0, 0, 0. And it would have been that last weekend too, I guess, because we were in a correction. But I'm still looking at how much we have in the 25-day window, but with these follow-through days and a subsequent follow-through day, that's not as important to me. Market school model was stuck at 0 exposure. Now it's at least exposure 1, which I think is 35%. I'll have to look that up. Buy sell day count, it was only 8 buy days, 13 sell days last weekend, distribution dominant tape. This weekend, now we have 9 buy days and 10 sell days. So we're getting closer to break even within our 25-day window. Matt Caruso high-low indicators were showing weakness on the NASDAQ and the NYSE last weekend. Now both those are improving. Last weekend went confirmed trend, uptrend to under pressure to end correction. This week, we just went back to confirmed uptrend and at least stuck the landing for a second day. Charts are getting whacked, especially on EPS. That's still happening. We saw that again this week. Growth had been in a bear market. The rest had caught up, is what I said last weekend. This weekend, we're now seeing some setup, strength, and breakouts. So we'll take a look at those. We're still in a power outage under the power trend or nothing or power outage. That still continues, but if the 21 can retake the 50, I think is what we use to turn the power outage off, and then we look for a power trend to start. So after this weekend, I'm sort of like, okay, we got the go button, but we want to watch our step and we want to pay careful attention. So it's slow speed ahead. It is not full speed ahead. It is wading back in. It is not plunging back in. Still a very difficult market environment. Main guiding principle is one good decision trade warrants another one. So if you put on some exposure and it starts making progress, not stopped out right away, look for something else. Because if we're in a new bull market, best case scenario, then we're going to see stocks setting and breaking out for several weeks, maybe as many as 7 or 8 weeks, and we'll have a lot of opportunities. If it's just a bear market rally, we'll still have a chance to get in some stocks early on and hopefully make a profit on them. So we want to be prepared for the follow-through day to fail. We don't want to predict, we just want to interpret. Primary goal on every buy, just get me to the 20% profit zone. We're not trying to load up on true market leaders at this point. We'll identify which ones might be the true market leaders when we see which ones make the most progress as the portfolio gets filled up. Still a lot of weights on the market. Fed talk, Fed walk. We know they're still coming on this. Inflation, milk and gas and meat, everything gets more expensive. Had 1 quarter of negative GDP already. Still a lot of supply chain issues. EPS season Q1 was just ugly. Worst I remember in a long time. Today's 94 of the war. So we got Russia exposure issues are coming up in conference calls. You have Starbucks shutting down there. You have McDonald's selling all their stores there. Plus you have raw material issues, oil and gas issues. So there's going to be a lot of ripples from those big rocks that are being thrown right now. So also, are we going to see capitulation? That's sort of, are we going to get that third leg down? Are we going to see fear, put call spike? We did not see that with this turnaround we just had. Are we going to see climax runs in energy stocks? They're sort of the last sector tree in the forest, although we're looking for some new sector trees. We're at a point, no prior leaders are standing. I think Apple and Tesla were the last two. They have broken down. They were the last trees in the forest, but those were prior leaders. So we certainly are looking for new leaders. And I mean, stocks, they don't have to be new as in the IPO sense, but they are new leaders. They're stepping up to roles they have not fulfilled before. Now looking in that COVID graveyard, because I've got a long list of stocks in the COVID graveyard and they're going to stay there. Average bear market's 9 months long. We're 6.25 months in. They can be shorter, they can be longer. You know, the dot-com bear went almost 3 years, financial crisis bear, 1.5 years or somewhere in there, 16 months. I'll have to look at it. I've covered it at the meeting. So we are finally seeing some setups in new names. So let's jump back over here to Market Smith. I just threw them in a list. So the energy stocks have been leading. as I mentioned, let's just go to weekly charts. So here's SM. This one broke out this week out of a stage 2 base, beautiful RS line, great earnings and sales. There's an oil stock pretending to be a growth stock. So EQT broke out this week. That's still in oil gas. Devon, in hindsight, clearly is the leader in the oil and gas space as best I can tell. Then we're seeing some medical stocks, and these are creeping into the top 40 industry groups. So we have Merck, which we've been talking about, just went past its all-time high, still in the blue zone there. Has Canslim earnings and sales. So we want to see these, even if this looks extended to you and you wouldn't enter it. We want to see these breakouts work. Lantheus Holding, this one, triple digit earnings and sales, strong. Another one in the medical area has kind of come through. This is really not quite long enough to be a base, right? Let's look at daily chart. Yeah, not quite long enough, but went to a new high, so we put a less than just sort of a pilot position in the group teaching portfolio. And then the other area that is showing new life, lithium. And this is a lithium and a fertilizer stock. I think this one, just like Devon Energy was the leader in oil and gas, this looks like it could be the leader in the lithium space. Triggered the green flag this week in just 2 weeks, up 4 weeks in a row. Look at that, had about above average volume every week. Stellar, just screaming Canslim numbers, triple digit earnings and sales. So that one's looking good. Albemarle set up, if you draw one of those David Ryan horizontal trend lines they talks about, kind of somewhere in there, it broke above that this week. Maybe it forms a handle on this cup. I know that's a little bit deep for a cup, but it is setting it up nicely, and you see the volume coming in on the right side of the cup, which is what we want to see. And then the third one in that space is Livent Corporation. Didn't stop to form a handle up here. Again, you could have drawn horizontal trend lines or sloping trend lines on this one. So broke out, strong volume. And then just a couple other ones that were popping up. Ukraine's kind of the breadbasket of the world. So if we look at the daily chart, this is that's a constructive handle. It's just kind of coming down nicely, gradually, as volume's backing off. I mean, it'd be nice to see volume totally dry up, be way down in here and tapering like that, but that looks constructive. Maybe something to keep an eye on. We know some other food stocks or some chicken stocks that are doing well. And then in the chemical space, I'm seeing some strength. So here's Univar. Go back to the weekly chart. So can draw a 3-touch trend line in there, relative strength line at new high. Again, very strong earnings and sales. And then also Dow, the chemical company. This is another one, it formed a cup with handle, tried to break out, and now it's paused and formed its own little 9% deep flat base right there. Let's see, look at the daily. Yep, so you can even draw, 3-touch trend line there. If it comes up through that, if you've done your due diligence and it was on your watch list, I think that would be one that's worth studying. But the main thing is we now suddenly see setups. So we always need a follow through day and Canslim stock set up or setting up to break out in the next several weeks in full or proper basis. So we're hoping we don't see all those charts get trashed suddenly. So keep an eye on those, as well as the ones that broke out Friday that I mentioned. Livent was one of them, and then ticker CBT and ROCC. I didn't pull those up. I think those are both in the oil and gas space, so I had several of those in there anyway, but some of those are still breaking out. So even if the laggards or the late breakouts can make progress, that would be positive. So our monthly meetings, which are much more detailed from an educational standpoint than the weekend updates. We last met on May 17th. Here's the things we covered. We talked about the concept of always having a follow-through day watch list in addition to your weekend watch list. Ideas to go to, so we went through that and I showed you mine. talked about rally days, follow-through days. We looked at prior bear markets. We talked about a detailed way to handle the EPS season in your weekend routine. We looked at cousin stocks in the EV space. We started doing this at our meeting 2 months ago. And of course, one of the cousin spaces was the lithium space. So we looked at all the lithium stocks, including those three, which I think they may be the only three that are profitable right now on our lithium list. So they obviously are the preferable ones. So we looked at those 2.5 months ago, and we now see those making progress. We also looked at the uranium stocks, which are getting killed. So that group did not work out and is not leading right now. So looked at the group teaching portfolio, talked about recent IPOs are just has not been very much, thin garbage. But with this market turns around, that'll be another sign that maybe the trend's improving if we start seeing some big IPOs with some big underwriters and raising some big money, like $500 million instead of $50 million. So our next meeting will be Tuesday, June 14th. Look at the M factor, go over some IBD live tidbits. We'll do a little Market Smith tips, tricks, or tools, try to cover something each month quickly. We're probably going to look at the 2007 to 2000 bear market in more detail, kind of walk through it, look at rally days, follow-through days. How did the legs play out? How did it unfold? I think that's a good one for us to study in more detail. We'll go to the EV space cousin stocks again, as I said we would do all year. We'll look at the group teaching portfolios, changes, trades, post-analysis. I did trades not taken last month, so we may look at one of those again and explain why. IPO market, we'll do open mic Q&A. And then the prior meetings, you can order these. Attending the meetings live are $12 per meeting. You can order the prior ones. These are $15. If you don't have a set of written sell rules, I spent 3 months. This was a very detailed segment on that. You really need to have written sell rules. That's just one of the biggest step to the next level in your trading journey, I think, is to have a personal set of written sell rules. So we walked through that. And then the other thing I think is really important is to have a complete weekend routine. So I spent two meetings covering that. And then I can send you the whole list. So if you're interested in ordering meetings, just email me at this email address, greenvilleibdmeetup@aol.com, and I'll send you the whole list and how to order them, and you can pick what you want. Meetup websites, Greenville East Side is the one I do with IBD. Stockyard Meetup site is the one I do just to schedule the online meetings. You can follow me on Twitter, and of course you're on my YouTube page if you're watching this. So please like and subscribe. Weekend reviews are there. There's teaching on the group teaching portfolio. That's a spreadsheet I make available. You can use. I have about everything built into it where it's also a tool for post-analysis. The 8-week hold rule video I did is on there, which is not even a rule. So I think that's it. Y'all have a great Memorial Day. Have a great weekend routine, and I'm out of here.